We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask from returns for you guys to smash that like button. And if it's your first time here, welcome to the channel. We're going to go ahead and look at our charts here with 42 Vision and break down what is going on in the overall market and what this could mean moving forward. And we have some key dates coming up next week, especially with the Fed. Now, the SPY was pulling down lower today, but it wasn't the only stock falling. The QQQs fell as well, and our QQQ bot at 9:45 a.m. sent out a bear indicator, and from that moment forward, put options went up 200% plus within minutes to hours, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected over to our bots, and becoming part of a community of investors all looking to learn and grow together to maximize within the volatility, and you can now gain access to it as well. So here we are with the SPY. It's done a complete transition on 42 Vision from bright green to white with red borders. This is what we call the dip areas. This is what we call the rip areas. Now, it does not signify or guarantee it's going to come right back up, but tends to be a reversal followed after these white with red borders. Some are weaker, some are stronger. You could see the 2 points here, how I try to reverse, and they were weak, and they continue to get canceled to the downside. So we're going to break it all down in today's video. We're going to talk about the key dates coming up next week. But before we do, I want to share with you guys the 2 home run opportunities I mentioned yesterday early on in the pre-market. And as you could see popping up here on the screen, these are some of the home runs we managed to find last week, and we strive for opportunities like these every single day. Not guaranteed to be this way, but we strive for them. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of our growing community of investors, all looking to learn and grow together. So these are the 2 stocks I mentioned this morning. Both of them gave jumps of 10 to 20%, 20% plus, turning to be a home run. And this is MOBQ, AXSM, and we caught them in the pre-market. And the first one here is OMBQ. We caught it under a bull indicator, full strength on 42 Vision, and within the pre-market hours, within just minutes, gave a highest point of 25% plus, came back down, sat sideways, and gave another 20% plus jump. Then we caught here AXSM. It was pulling downwards under a bear indicator in the pre-market, consolidated, shifted into strength, got that bull indicator, and gave a highest point of 20% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, and it's pulled back significantly in the last several days, and we're going to break down why this is happening and is it the end of this bull run. Now, the last several videos I made was way back in the middle of July when we were retesting the lows, and it was coming right back down towards the 370 area. And I stated if we broke back up, we needed a break above 390, 393, and then we could try to retest 400. And if we broke above 400, the next resistance was 420, and we're rejecting slightly above that at the 430s, and we're back towards 420, which is now a support that if it gets broken through, we could start pulling back towards 400 and other numbers as we've seen in the charts. And we're going to break it all down in today's video. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to our SPY bot, QQQ bot, newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which you can now gain access to as well. That gives us that extra layer of confirmation and an edge within the volatility. So here we are on the 30-minute under a bear indicator since the pre-market on Friday. We crossed the midpoint. Outflows are dominating, and as it's going lower, there is some inflow picking up here, but it has not crossed the midpoint to actually impact the chart just yet. It needs to cross over if it's going to pull things back up, and then eventually start breaking through resistance and cancel out that bear indicator and get a bull indicator within the volatility, right? But right now, things have pulled back significantly, and we need to zoom out and look at a few things. But why is next week going to be so important? Well, one of the main things is Jay Powell is going to be speaking at Jackson Hole Friday, August 24th. Well, August 24th is actually Wednesday. It's an actual 2-day meeting, and you can see it here as it states Fed Powell is going to speak on August 26th at the Jackson Hole conference. So it starts on the 24th, it ends on the 26th, and in those 2 dates, there's a lot of other things going on as well. And this is going to be a big deal because this is where the markets are going to hear the tone of how aggressive of hawkishness or dovishness of not being aggressive the Fed is going to be. The Fed has been very clear that they're going to tackle inflation. In my opinion, that's all it takes to sound aggressive. Now, the markets are acting a little different because of how quickly they're actually pricing in the easing of inflation, already pricing in next year's possibility of the Fed pulling back on these decisions. And then you see these type of headlines here stating the Federal Reserve's Jackson Hole meeting could shake up the markets in the week ahead. And it's not just the Federal Reserve, right? The Federal Reserve is going to have a big impact. We'll see what Fed Jay Powell has to state. But as you see here popping up on the screen in the overall dates that are coming up, we also have the gross domestic product, GDP, revisions for Q2. If they stay negative or worse than expected, as I circled there, that's going to be important. Then we also have PCE coming up those same dates as well. And initial jobless claims while at the same time Jackson Hole is happening. And this is all going to kind of map out how aggressive the whole entire Fed needs to be, how inflation is looking, how unemployment is looking, and the strength of the economy, quote unquote, right? But at the same time, as traders, we want to watch the charts. Right now on the 30-minute, outflows are dominating, right? But when you zoom out and you go towards the 4-hour right here, you could see that we have just crossed for the first time in weeks, okay, the outflows again, okay? Now, the last 2 times we've done it on the way up, they've been short-lived and quickly actually stagnate, sit sideways, and inflows start to pick up pretty quickly. And both times that we cross, which is what I'm going to be watching for, things jumped up significantly, right, for the next few days. But we had not gotten a bear indicator. We were under a bull indicator and no bear indicator. And you could see here that dip area way back here at the 370s, and we've done complete shifts into bright green and no more dip area since then. And this is our first significant pullback, crossing the midpoint, going into the outflow section that outflows are dominating, and at the same time got a bear indicator. This is the first bear indicator that we see in weeks, and we can actually even say in a month. So this is very important what's going on here. This could be short-lived, or this could actually become more dominant. And the way I'm going to be watching it is if these outflows break through the levels that we previously saw, like right here and like right here, and if it continues to be dominant, pulling away from the midpoint. Now, if it actually stagnates and does some sideways action like the last 2, I'm going to be watching for a possible breakout back to the upside, meaning that there could be a significant jump coming or significant pullback. That's the main thing I'm going to be watching here. We got a bear indicator on 42 vision. We're doing the shifts from bright green so far to red. We still haven't hit a dip area, which is why with red borders, that would be extreme weakness. And we went from inflows dominating and being green to red, and now crossing the midpoint, becoming significantly impactful to the charts. And we need to talk about supports to watch, right? That's the main thing I'm going to be watching going into next week. How much more predominant this could become, or will it do the same effect that the last 2 did, even though a bear indicator popped up? And if it crosses right back up, it could become significant to the upside. I mean, both times we ran significantly. I mean, we went from 390s all the way to 413, and from 410 all the way to 430. I mean, that is nearly a 5 to 10% plus move in a matter of just days. And in options, that could have been hundreds of percent, right? So here we are with the 4-hour, and on the 1 day, things are a little bit different. We're under a bull indicator, and we just changed to our first significant bar to the downside of bright green with red borders. The other 2, it was kind of consolidation. This is the first significant pullback and we went from green to red. I'm going to be watching how much more significant this red line goes to the downside and how much closer it gets to the midpoint, or if it even crosses it and goes even lower. The last time that we actually crossed it was way back here in June 8th, and we quickly dropped from 412 all the way down to the lows of 361, and you could see that crossover right there. And then the other one was back here in April, and we went from 450s all the way down towards 380s. And then right now we just had our first crossover here July 19th. We got that bull indicator shortly after, double confirmation and transitions into strength, and we went from the 380s to the 430s. And right now I'm going to be watching very carefully here if we go ahead and get closer to the midpoint or even cross it on the 1 day, because that's going to become significant, guys. This next week is a huge week to hear the Fed's tone and what the Fed has to say, and also what the data is making the Fed say, because remember, the Fed has stated they're going to be data driven, quote unquote. So depending on the data, it's going to drive their decisions. That's what they've been stating at every meeting, and it's going to be important. Now, in the last rally, if you look at it right here, this happened in March. This was pretty exciting, and everyone thought that the bear market ended, right? And all of a sudden, we pulled back down. We got another bear indicator shortly after, about 2 weeks after in April, and it lasted all the way down to these lows. And we just got a bull indicator, and we've done a complete transition from white with red borders to bright green. Once we hit bright green, eventually there is a slight pullback. Now, doesn't always mean it has to completely collapse like it did here from March to June and July, but it does mean that eventually we've hit an exhaustion point and things are going to set up for either the next bull run or the continuation of retesting certain lows or breaking to new lows. And we've broken down past history way back in 2000, 2008, and even the 2020 crash. So super important to keep in mind that things are a little bit different here. And we're also in a position where the Fed is still doing quantitative tightening. It's also raising rates at the same time. And right now the markets are trying to price in either it's going to be 0.75 in September, it's going to be 0.5, so forth. But there's still a lot more going on. And even earnings, guys, earnings of individual companies have not been revised to the downside, expecting that, things are slowing down. We've heard them give us guidance. That's why things have fallen this much in the last several quarters. But no one has actually revised like, okay, well, the price target might have to go down because individual companies are sending out guidance stating that demand is slowing down. Well, that means that their profits and revenue is going to go down. That means that their stock price is going to get affected eventually as well. And that's something I think the markets have not priced in. Everyone's been worried about the R word, recession, the GDP negative consecutive quarters, then also the interest rate hikes, quantitative tightening, but no one has priced in the fact that guidance is actually looking like slowing of demand, and slowing of demand means stock prices are going to get hit if they're missing their earnings. And I think that's going to be another turbulent volatility that we need to go ahead and be aware of. Now, is it guaranteed that we're going to retest these lows or even break through them? No, but we do need to watch carefully here in the bigger picture. The first support I'm watching is 410 from where we're currently at. The closer one to go ahead and put it even closer is 420, and how things react between 420 and 410. Now, if both of those get broken through, the next support is down here at 390. In the process too, I'm going to be watching if a bear indicator pops up on the 1 day, and if these outflows continue towards the midpoint, and if they even cross the midpoint, signifying that inflows are no longer dominating and holding up the chart. If not, outflows are dominating, and this is based off the 1 day chart. On the 4 hour, we already crossed. I'm going to be seeing if this becomes more dominant to the downside or does the same effect that the last several ones did, and things pop right back up pretty quickly. And as you could see, beautiful bull indicator there all the way up to this point, but it's our first bear indicator that we've seen in weeks, and like I stated earlier in the video, in months. And here we are crossing over the midpoint on the 4 hour. And within the volatility, yes, I'll be watching the 30-minute to see what's going on and also the 1 hour to see if we can try go ahead and bring itself back up and cross the midpoint, or is it going to try to pick up some inflow some point this week between Monday and Wednesday and reject the midpoint and come right back down and continue that downside on the 4 hour and the 1 day as we see it picking up. And we're under bear indicators on all of these different time frames, the 1 hour, the 4 hour, the 30-minute, as we speak. So I'm going to be watching for possible bull indicators that can cancel these bear indicators, and are they going to be fake outs that reject as they get closer to the midpoints, or are they going to continue to get pulled down and stay below the midpoint, signifying that outflows are dominating, guys. As always, thank you guys so much for watching, and let's make some money.